Choppy session for Asian markets that saw most of them ending lower today. But mainland Chinese stocks, those bucked the overall regional trend to recover from earlier losses, ending in positive territory. The Straits Times Index, meantime, that fell by about 1%. It closed at about 3,109, erasing this year's gains. DBS, meantime, saw a slight drop. Same CapitaLand closed nearly 4% down. Semcorp, though, that one bucked the overall downward trend, ending about 0.3% up. And here's how the U.S. market is performing in early trade. The Dow, Nasdaq, S&P 500 eking back some gains in Tuesday's session, and it follows Monday's rout on the U.S. stock market. The S&P 500 closed down by 3.9% and entered bear market territory. In fact, it's more than 20% down from its most recent record closing high on the 3rd of January. Now, investors, they were spooked by expectations of the U.S. Federal Reserve raising interest rates by 75 basis points on Thursday. That's after the U.S. inflation came in at a 4-decade high. Well, there are concerns that such aggressive move by the Fed could trigger a global recession. One analyst says the coast is clear for now.
Recessions are usually accompanied by rising unemployment rate. But right now, U.S. Job market is very, very robust. Right. So unless we see a stabilization and then subsequent weakening of the U.S. job market, we think that odds of a recession happening because of weaker economy are relatively low. So clearly it becomes a greater risk in second half of 2023, but not in the next 6 to 12 months in our opinion.
And another analyst expects the Singapore market to be a bit more resilient even as the sell-off in the U.S. continues. He added that how well Singapore stocks perform today depends on the sector.
The ones that did fall were many of the real estate investment trusts, the REITs. The reason why they fell is primarily because they are quite heavily geared. In other words, they borrow a lot of money in order to finance the purchase of their properties. Now, if you borrowed a lot of money, eventually you're going to have to repay that money and also pay higher interest on your loans. On the other hand, some of the banks were also kind of treading water because these are the companies that benefit from higher interest rates.